Hello, I'm Anastasia Amoroso, and this is Beyond 60/40. Today, I'm joined by Marc Lasry, co-founder, CEO, and chairman of Avenue Capital Group. He shares his insights on sports investing and shares where he's finding surprising growth opportunities. Then, iCapital Managing Director and Head of Advisor Platform, Bekka Marrs, helps me answer your question of the month. And with the Super Bowl right around the corner, we thought in this week's private market polls, it would be fitting to focus on the growing role of private equity in sports. For a long time, owning a professional sports team was seen as a personal venture or a generational investment, and private equity and other institutional capital was largely on the sidelines. Indeed, when you think about the iconic teams and their owners, you picture names like Jerry Jones of the Dallas Cowboys or the Steinbrenner family of the Yankees, not private equity firms. But today that is changing, and private equity firms are making their way onto the playing field as major sports leagues relax ownership rules and existing owners look to partially cash out. Just last year, the NFL gave the green light for the approved private equity funds to buy up to a 10% stake in teams, joining several other major sports leagues that have opened their doors to institutional capital in the past 5 years. These rule changes have sparked a wave of private equity activity. Today, 71 major North American sports teams, collectively valued at over $205 billion, they're now either backed by or affiliated with private equity. And the opportunity is still vast. Of the 153 teams across the NFL, NBA, MLB, NHL, and MLS, 82, or more than half, still do not have private equity involvement. And when you factor in growing areas like women's sports, college sports, esports, and even various international leagues, the potential for private equity to make an impact is sizable. So why is private equity so eager to get in the game? Well, for starters, the global sports market is massive, connecting nearly 8 billion people worldwide. And it's not just about owning a sports team directly, it extends into media rights, merchandising, real estate, and even sports betting. Today, the global sports market is worth more than $460 billion annually and is projected to nearly double to $860 billion within the next decade. That's a lot of growth potential, and a big part of it is being fueled by media and streaming rights, especially as competition between big tech and legacy media heats up. Take the NFL, for instance. Back in the late 1990s or early 2000s, the average annual value of its media rights contract was around $2.2 billion. Today, it's worth $6.5 billion. And with a push for exclusive streaming rights from the companies like Amazon and Netflix, that number is expected to jump to $12.3 billion over the coming decade. That's nearly a five-fold increase from the early 2000s. So what does all of this mean? Well, bigger media right fees translate to larger revenue and profit sharing amongst the teams and their related businesses, ultimately pushing up valuations. Indeed, valuations for major sports teams are soaring. In the NBA and the NFL, average franchise values have increased by a staggering 600% and 350% over the past 10 years. For context, the S&P has only risen by about 200% during that time. Private equity firms are seeing this continued growth, and they want in on the action. As private equity steps up to the plate, there's significant potential for these teams and the underlying assets to continue appreciating. Unlike traditional owners who might view a team as a personal or a generational investment, private equity sees these assets as operating businesses with untapped potential. So they might focus on things like increasing operational efficiencies, consolidating and commercializing assets, and finding new ways to grow revenues through things like cutting-edge technologies to enhance fan engagement. Private equity is not just investing in sports, they are actively reshaping the industry. And that's your one thing in private markets this week. I am pleased to welcome my first guest today, Marc Lasry, co-founder, CEO, and chairman of Avenue Capital Group. With 3 decades of tenure as a fund manager, Avenue now has nearly $13 billion in assets under management. Marc, welcome. It's great to have you here today.
It's great to see you again. Thank you.
Thanks so much for coming in, and I'm so glad you're here to talk about all things sports. And there's a lot happening in the world of sports. Of course, we had the recent news last fall about the NFL and being able to take in the private equity minority stakes. There's also rumors about investing in college sports. There's golf, esports, you name it. There's a lot for us to talk about. And what I love about this opportunity is that you have personal experience investing in sports. And now at Avenue Capital, you're focusing part of the strategy on thinking about where the opportunities are in the sports ecosystem. So with that, let's jump in. And my first question is about that personal investment that you made. And you were the co-owner of the Milwaukee Bucks from 2014.
Yep.
You sold it in 2023. What was that experience like?
It was a great experience. I loved it. I thought it was pretty unique. You got to go in the locker room. You got to talk to the players. It was just fun. But more important, you got to learn about the business of sports. The one thing you want to do is you want to get the best players. But to get the best players, you have to have money. And so for us, we ended up focusing on that, and I learned quite a bit.
Right. So it was fun, and it was also a profitable enterprise as well. And there's been quite a bit of growth in terms of value of the team when you bought it versus when you sold it. How do you think about value creation when you own a sports team? How do you drive that?
When you bought the team was last in the league and everything, and then it moved up. Obviously, we won the championship. That was great. I remember when we won, you get to hold up the trophy.
Yeah.
Right, and that's kind of fun.
A very cool experience.
Very cool, right? It's on national TV. Everybody's watching. And before I go out, my son looks at me and goes, "Whatever you do, don't drop it."
Yes. Good advice.
So I get the trophy. It's kind of heavy. So I'm lifting it with two hands like this. It's great. And then 5 minutes later, Giannis grabs the trophy and he's like with one hand going like this.
Don't drop it. Yeah.
It was a cool experience and it was a lot of fun.
Obviously it's a great experience, and also as an owner, you have to think about valuations and growing those valuations. So what have you learned about, what's the magic, what's the secret sauce to growing a valuation of a franchise?
So teams only make money three ways. It's going to be ticket sales, it's going to be sponsorship, and it's going to be media. The one that really grows is media. If you look at the last NBA deal, you were getting about, I'd say sort of $2.7 billion per year. And now you're going to get somewhere around $7 billion.
That's a huge step up.
That's where the real focus should be. And I think for us, when we're trying to invest in teams or in leagues, anything we try to invest in, we look at where the media could be, because that's going to be where you're going to make the most money.
Well, let's talk about valuations of media rights. As you mentioned, there's been a huge step up, especially in the NBA, but it's been there for other places as well. So if I'm an investor that's new to sports, what is my entry point today? Is it quite as attractive as it was 5 years ago? Am I going to look back on this time and say, oh no, I shouldn't have been investing in these high valuations?
I think ultimately in sports, your teams are going to grow around sort of 10 to 15% a year. Right, so if you're investing in the NFL, if you're investing in the NBA, baseball, or hockey, you're going to make about 10, 15 a year. If you look at sort of all those teams over sort of a 20-year period, the average has been 11.8%. So, and that's NFL, NBA, Major League Baseball, and in football.
I mentioned at Avenue Capital, you do focus on identifying sports opportunities as well. After selling the team in 2023, why the pivot? Why did you decide to pursue investing in sports at your business?
Well, I love sports, right? And
that's a good reason.
It's a good reason. And I think I understand it. And owning a team, you get to meet everybody, but more important, you understand sort of the business of sports. So for us, we've invested in a bull riding team. Why did we invest in bull riding? Because we think their next media deal is going to be multiples of what the current one. We invested in Sail GP. So here's a sailing league. Here's a great question for you. We have 350 million Americans in this country. All right. Do you know how many watch hockey? 500,000.
500,000,000.
500,000.
That's it.
That's it. Baseball, 1 million. Basketball, 1.5 million.
Right.
So when you think about it, you got 350.
That sounds like a niche sport.
It does.
Right.
No, but they're getting paid so much. But the amount of people who are watching, so where it ends up is really on the playoffs. In the playoffs, they'll have 10 or 15 million people watching. So bull riding, has 1.2 million viewers. That's more than baseball.
That's shocking.
It is. For the one that really will shock you, sailing. Sail GP had a race. They had 1.8 million viewers. So when you start looking at it, what we're trying to do is find those viewers, and you actually automatically see the ratings. So you know how many people are watching, so we're investing in those. We want to invest in women's sports. Why? Because that's fastest growing. When I was a kid, if I went to a game, I went with my brother. He never took my sister. Today, the idea, you have a daughter. Would the idea of bringing her to a game, like, do you say, no, I would never bring her because she's
Of course I would. Of course I would bring her.
Of course
She'd
you
love
would.
That.
But that's what it is. That has changed. And because of that, people are more interested in women's sports. I think women's sports is huge. I think there's a huge opportunity there, whether it's women's soccer, whether it's women's volleyball, WNBA. But what you're seeing the spike in ratings for everybody. And what that means is that more and more people are watching, right? And we're trying to find the areas where more people watch. And that's happening a lot in women's sports. So that's a big focus of what we're doing.
Right. How niche is women's sports right now, or is it? And how much scaling do you think will happen?
Oh, it's huge scaling. Here's a great statistic. Caitlin Clark, in her final game of women's basketball in the championship game, you had close to 20 million viewers. That's more than I've ever watched the NHL playoffs, Major League Baseball playoffs, the World Series, and only one NBA game has come close to that, and that was LeBron and Steph. So when you look at it, there's this huge interest. And on the media side for women's sports, their first deal was $1.5 million. Their next deal was $60 million a year. And why? Because there's more people watching, more young girls, more young men. Go to a Liberty game in New York. You go there, you're going to see half of the people are men, right? So why is that? Because I think people just want to see the best in the world compete. And those are the best athletes.
You brought up Caitlin Clark, and that kind of raises another point, which is there's this rise of a personality, there's a rise of a persona, there's the image, and it's certainly been true for a long time in professional sports, and it's becoming true in college sports. And do you see the path for private equity taking stakes in college sports?
Yes, I think there is. We're negotiating with a number of teams, a number of schools, for us to invest in their programs. I think that's going to be the next wave.
And what is the monetization potential of that, right?
So what you do with a college team is you're investing in a team that people want to see and people want to watch. And it's going to be the same thing, that over the next 10 years, you're going to have more people coming, ticket sales will go up. You'll end up having more sponsorship. And more important, the media will go up. By us investing in it, we're giving them money to grow and to achieve all those goals.
So one of the other growth areas we have seen is in esports and golf, and now there's this convergence of the two, which is the Tomorrow Golf League, and you are an investor and a backer of the San Francisco team. Tell us a little bit about that.
So we invested in that with Steph Curry. It was a great investment. We ended up buying that team for around $37 million. You're looking at a new league that got started, and really what it is just golf. And you can watch it for 2 hours. The ratings ended up being about in excess of 1 million viewers, which is great. I just want everybody to know when we played our first game, shockingly, we crushed them.
Not shocking to you.
Yeah, not shocking to me. And we won and we did a great job.
Congratulations.
Thank you.
We certainly spent a lot of time here at iCapital as well, supporting our golf ambassadors, so that's a great venue as well. And Marc, I guess when you think about the next 10 years and the future of sport, what's your, one or two big predictions for, what's the sport of the next 10 years? What's the biggest growth opportunity you see today, or any other prediction you might have?
People love the Premier League, right? And you're seeing that. What you find with soccer is around the world, everybody loves it. You could go to China, you could go to the Philippines, and you'll see somebody likes Manchester United or they like Chelsea. But you're seeing that that's a sport that has no boundaries. So I think for us, that's something we want to invest in, and we have. We've already invested in a number of teams that we think are going to do exceptionally well over the next few years.
Well, we'll certainly watch that, especially in the lead up to the World Cup in 2026.
I know, that'll be fun.
Personal question. Do you think you'll personally invest in a franchise again?
I hope so. I think so. I think we'll either invest in one of the teams or we'll try to do something when the NBA tries expansion with, I think it'll be Seattle and Vegas. It could be Mexico City. But I think in the next year or two, we'll try to get involved.
Well, we'll certainly watch that. And Marc, thanks so much for coming in today and sharing, your personal experience with sports and the Avenue Capital focus on sports investing. And it certainly takes knowledge of the space and a lot of some of the star athlete connections that you've built over the years to really make that successful. So thank you so much, Marc, for your time today.
Thank you.
Today, in our Spotlight segment, we're answering your question of the month, and I've asked iCapital Managing Director and Head of Advisor Platform, Bekka Marrs, to help us out. Bekka, thanks for joining today.
Thanks for having me.
So here's the question of the month. What key product developments do you think will have the most impact on simplifying alternative investing? What do you say?
Great question. So the way I think about it is this. If we think about the technology and you think about the financial products, alternative investments have inherent challenges. There's things that feel hard in the process of buying them or owning them. And the technology is here, and our vision for the technology should be to make it easier. And what I mean by that is we want to make alternative investments feel a lot more like liquid products. And that comes in the form of delivering technology that can integrate alternative investments into the same sorts of technology and platforms being used for liquid products. They can't live off to the side in a silo over here. They need to be right alongside and part of everything else that's happening in the liquid portfolio.
All right. No, that's certainly a nice vision to have, but I'm sure there's technological challenges that go along with that.
One of the major challenges we find is right now, many of the solutions that are out there are attacking a single problem here or a single problem there. And you don't want to be having to log into 15 different systems. Nobody has time for that. And so, the challenge is stitching it all together. How do you integrate the whole thing? How do you make it part of the end-to-end experience?
Right. And, this question I ask a lot, but I ask it to almost everybody in the industry because I feel like maybe the answer varies a little bit. And so from the technology perspective, from your standpoint, where are we in the evolution of access to alternatives?
Yeah, I think from the technology standpoint, it's not day one, right? We've had a technology platform for 10 years that's been out there, but we're at a really interesting place where I do still think it's early days. And I say that because what we're seeing is there's the technology product and there's the financial product. And the financial products are evolving, right? We just came to market with model portfolios. There's going to be other wrappers that are out there. You're seeing a tremendous amount of product innovation. And the technology needs to innovate in lockstep along with the financial product. It should be a driver of that change and a driver of innovation, not something that's lagging and trailing behind.
So definitely the product innovation sounds like technology innovation should keep up with product innovation. And so are there any bottlenecks or challenges with that right now?
The big last remaining area is data, and data being the sort of thing that underpins everything, meaning you can build all the best features and functionality in the world, but if data is disparate, if it's sparse, if it's inconsistent, the features aren't going to do you any good.
I'm sure that's a big bottleneck for really the industry as a whole. But as you focus here on the roadmap for this integrated vision for iCapital, what's on the roadmap in the next 12 to 24 months?
First and foremost, like I said, it needs to be end-to-end. And we have a tremendous number of solutions, but the experience needs to be cohesive. And so finding ways to make it more integrated across our entire platform is huge. And as we do that, we are pivoting from what was historically maybe focused on a single transaction or reporting on a single investment. And we're instead moving to a world where everything is anchored and focused on the client. Who's the client? What's everything the advisor needs to know about the client, whether that's transactions, positions, et cetera, to make it a really holistic and integrated ecosystem.
It's definitely a journey to get to that holistic place and to get to a place where it is as easy to access alternatives as it might be to access liquid investments. And obviously, a lot has to go on that technology roadmap. And Bekka, thanks so much for helping us think through what kind of product innovation we need to have and are working on at iCapital. So thanks so much for that.
Thanks for having me.
Thank you. And we'd like to hear from you. Send us an email at yourquestion@icapitalnetwork.com and let us know what questions are at the top of mind for you and your clients. I'm Anastasia Amoroso, and thank you for joining us today on Beyond 60/40. We'll see you next time.